Hi. In this video, we will learn about e-ledgers, that is electronic ledgers. We will see how the GST liability will be calculated and how electronic liability register is, or electronic credit ledger and electronic cash ledger is. As well as we will see interest and late fee. So first of all, let me tell you once again that the formula for calculation of tax liability is output tax minus input tax. What is output tax? The tax collected from your customers is called output tax. Suppose I am providing auditing service to my client and I am collecting tax GST from that client, then that will be output tax for me. Then what is input tax? For running my office, I need various services, telephone service, internet service, sometimes I need to buy stationery. All these are I am getting from various suppliers. So I need to pay GST to them. So what tax I am paying to my suppliers, that is called input tax. Okay, so for arriving at tax liability, you need to deduct input tax from your output tax. Means the tax paid to your suppliers should be deducted from the tax collected from your customers, and that facility is known as input tax credit. Then let me explain with an example. There is a GST practitioner. He is providing GST filing, income tax filing and consultancy services. So he is collecting GST from his clients. So total value he provided is 80,000. GST collected from the clients is 14,400, and total amount, invoice amount, is 94,400. So here the output tax is 14,400. That means the tax collected from clients or customers. And on the other side, he has various expenses like rent, telephone charges, internet charges, etc. So here also he is paying some GST to his suppliers. So here it is 4,140, that is the input tax. So for calculation of GST liability, this 4,140 should be deducted from 14,400, and the balance, that is 10,260, is his tax liability. Then let us take another example, that is a bakery or sweet shop. So he is selling biscuits, cakes and cookies, pizza and sweets. Biscuits and cakes and cookies, it is GST rate is 18%. Pizza and sweets, it is 5%. His total sale was 93,100. Out of that, GST portion is 13,100. Okay, so this 13,100 is the output tax. And expenses like purchase of various raw materials and all, then rent 18%, marketing 18%. So he paid GST of 7,400 to his suppliers. So that is called input tax. That is 12,600 is the tax he paid to his suppliers. So that is the input tax credit he can claim. So output tax is 13,100, input tax is 7,400, tax liability comes at 5,700. So hope my explanation was clear to you. So whenever a person is registering with the GST department, he gets a login into the GST common portal. There will be three ledgers like liability ledger, credit ledger and cash ledger. The total of the output tax will be reflecting in the liability ledger, that is through GSTR1 or other returns. Then in credit ledger, input tax will be reflecting from the GSTR1 of the suppliers, that maybe in 2A or 2B statements. So input tax amounts will be given, and you need to calculate the tax liability with the formula output tax minus input tax. And what's the difference? That you should pay through your cash ledger. Okay, suppose your output tax is 50,000, your input tax is 40,000, and then you need to find out the difference that is coming at 10,000. That 10,000 you should pay through cash ledger, and it should be paid before 20th of the next month. Suppose we have calculated for the month of August 2022, then the 10,000 amount, that is a tax liability amount, should be paid before 20th September. Then I have already told you there are three ledgers: electronic ledgers, cash ledger, credit ledger, and liability ledger. So please check in any of the GST common portal whether all these ledgers are reflecting properly. Then first of all, electronic cash ledger. See, cash ledger is used for payment of taxes, interest, penalty, or fee to the government. There are two modes for payment, that is online payments, which can be paid by credit or debit card or internet banking. Then other payment modes, like you can go to a bank and you can pay the amount in cash. That is there is a limit, that is only up to 10,000 you can pay through bank. Otherwise you can pay through NEFT or RTGS also. Okay, so that is how the payment of tax, interest, penalty, extra are paid. Then you need to check whether the tax paid by you is reflected properly in the electronic cash ledger. If there is any TDS or TCS amounts under the GST law, that also will be reflecting in the cash ledger. So in our course, you can study how to pay taxes using the simulation software, how to create the challan, how to pay the amount, and how to save the challan, or how to check whether the confirmation is received from the GST department. All this you can see at simulation software. Then the second ledger is electronic credit ledger. As I told you earlier, input tax credit will be reflecting in the credit ledger. Whatever tax you are giving to your suppliers when getting raw materials or services, that will be reflecting in the credit ledger. Okay, so you can claim this input tax credit after checking it in the credit ledger. So what you need to do, you need to check with your purchase bills whether all GST you paid to your suppliers is properly reflecting in the credit ledger. And always check whether your input tax credit is blocked or unblocked. That we will see it in detail later, what is blocked or unblocked. Then the third ledger is electronic liability register. Means from your GSTR 1 or such return filed by each taxable person, the tax liability will be automatically reflecting in the liability register. Okay, so all your liabilities, whether it is tax, interest, late fee, or any other amount which you need to pay to the government, that will be reflecting in the debit side of the electronic liability register, as well as whatever the penalty or any amount by any order that is given by the assessing authority, that also will be reflecting it in the electronic liability register. And see, on the other side, you can detect your input tax credit and cash payment of tax or any such late fee or penalty. And of course there can be a reconciliation. Okay, so your liabilities can be paid through two modes. One is input tax credit and another is through cash payment. So you need to check whether all your liabilities are appearing automatically in your electronic liability register, and please check whether there is any other liability amounts are reflecting. Then where you can access e-ledgers. Once you log into GST Common Portal, you can click on Services. Under Services, you can click on ledgers, and under that you can see electronic cash ledger, electronic liability register, and electronic credit ledger. So whatever payments you need to pay to the government, that you should be aware. Mainly CGST and SGST for intrastate supply, IGST for interstate supply, outside the state supply, and TDS or TCS in case of public sector undertakings giving contract of more than 2,50,000, or in case of e-commerce operators, TCS will be coming, like in case of Amazon, Flipkart, or any suppliers supplying through them, for them TCS will be there. Then interest, penalty, fees, or any other payment as applicable. Okay, and who is responsible for payment? Supplier has to pay GST in the normal cases. Recipient or the buyer in case of imports or reverse charge mechanism cases. And in case of TCS, it is e-commerce operator, and in case of TDS, government department or such public sector undertakings for whom the TDS provisions are applicable. Then procedure for payment. All taxes should be paid before 20th of the succeeding month. For example, if it is for April month, you need to pay the taxes before 20th of May. Then composition taxpayers will need to pay tax on quarterly basis. There is an electronically generated challan in the GST and common portal that you can understand by doing an exercise and assignment in the simulation software. Then a challan will be valid for 15 days after its generation. Any GST paid will be reflected in the electronic cash ledger. Then I have given a screenshot of the tax payment challan. As I told, you can get a practical hands-on experience on how to do it in the simulation software. Then coming to interest under GST, interest will be applicable whenever there is a late payment of GST liability, okay, or unnecessary claiming of input tax credit claims and all. So if you are making a delayed payment of CGST, SGST, or IGST, you need to pay 18% per annum. And in case of claims excess input tax credit claims or reduces excess output tax liability, in that case you need to pay interest at 24% per. Okay, so in this video I have shared few points on electronic ledgers and what are the various purposes of these electronic ledgers, as well as interest and late fee, etc. Okay, thank you.